So, will artificial intelligence actually replace accountants? I mean, it's literally the ultimate question on everyone's mind right now when we look at the future of business and finance, right? Welcome to this visual analysis. Today, we're going to unpack exactly what happens when centuries-old mathematical principles collide head-on with 21st century algorithms. Let's dive in.
Our explainer today is From Pacioli to Prompts, the Evolution of Accounting in the AI Era. We are going on a seriously fascinating journey today. We're going to trace this whole evolutionary arc, starting from the timeless mathematical truths laid down during the Renaissance, all the way to the massive digital transformation and AI that's driving modern enterprises today.
Here's our roadmap for this explainer. We'll start with the origins of accounting, then look at the fundamental accounting equation and the double entry system. After that, we'll leap right forward to accounting in the AI era and wrap up with professional ethics and technology. Section 1. Origins of Accounting. Tracking Wealth. Just look at the visual contrast between these two historical heavyweights. On the left, we've got Benedetto Cotruglia's early treatise, which broke down the nature of trade and, what makes a perfect merchant. And on the right, there's Luca Pacioli, a brilliant Franciscan friar and mathematician who actually pioneered the whole theory of double-entry bookkeeping in Italy way back in the late 1400s. These works laid down a foundation for the profession that is just so structurally sound, we're literally still using its core principles today. It really proves that accounting isn't just, boring paperwork, it's the timeless structural language of business.
Section 2. The Fundamental Accounting Equation. The fundamental law.
Assets equal liabilities plus equity. This right here is the absolute foundation of all financial structure. Now, as a quick refresher for us, a company's assets, its resources, they don't just magically appear out of thin air, right? They are perfectly balanced by exactly how they were funded, whether that's through third-party liabilities or owner equity.
Let's see how this concept plays out in a miniature business transaction. Looking here, we have $55,500 in total assets. That's your cash, bank, facilities, and debtors. Now, that exact total is perfectly balanced by the funding sources. You've got $3,000 owed to suppliers and $52,500 in capital. The numbers just flawlessly balance out in real time. It's like a giant puzzle where every piece fits. Whenever you're analyzing some massive corporation's balance sheet, just remember this foundational logic. It scales identically, just with a whole lot more zeros.
Section 3. The double entry system. Keeping the balance.
The really crucial point in this system is the dynamic between debits and credits. As our sources state, there's an absolute rule here. There is no debtor without a creditor and absolutely no creditor without a debtor. Think about it. When a business makes a transaction, it receives a resource, which is recorded as a debit on the left side of the ledger. And simultaneously, it has to record the delivery or the source of that resource, which is your credit on the right. Every single transaction always has two sides. That's what ensures the fundamental equation never breaks.
Now, to organize all these debits and credits, accountants categorize everything into 5 standard groups, right? Assets, liabilities, equity, income, and expenses. Standardizing these into a coded chart of accounts is what allows for seamless legal and financial management across any enterprise. Honestly, whether it's a tiny local coffee shop or a massive multinational conglomerate, these 5 groups remain the universal buckets for categorizing literally every single financial move a company makes.
Section 4. Accounting in the AI Era. The Modern Challenge.
Okay, let's address the elephant in the room. Today's businesses generate massive, truly massive data sets. Think about global e-commerce, real-time stock trading, millions of microtransactions happening in the blink of an eye. It is physically impossible for a human being to manually record all these double entries into a ledger book anymore. Because of this sheer volume and the need for real-time processing, artificial intelligence isn't just some fancy add-on. No way! It is an absolute necessity, a collaborative tool we have to use to handle the sheer scale of modern data. So yes, AI analyzes those vast data sets in real time and automates the highly repetitive tasks. But you know what? Let's flip the narrative here. Far from replacing the accountant, these technologies actually elevate the human professional. By letting the software handle all that mundane data entry, the accountant steps into a critical, strategic role. They become this high-level advisor who analyzes the trends that AI uncovers, using them to actually guide a company's strategic decisions. Ultimately, the machine does the math, but the human provides the wisdom.
Section 5. Professional Ethics and Technology. The Human Element.
But of course, with great technological power comes immense responsibility. Our sources outline some major new ethical dilemmas here. First off, accountants have to fiercely protect data privacy and client confidentiality when they're feeding information into these AI models. They also need to push for algorithm transparency. I mean, you can't just blindly trust a machine's output if you have no idea how it reached its conclusion, right? And perhaps most importantly, they have to be super vigilant in preventing AI-assisted fraud. The technology can absolutely be manipulated to hide financial realities, and honestly, it's the accountant's job to police that.
Consider this really profound message from our sources. Public accountants must assume responsibility for acts and decisions based on AI, reflecting the reality and performance of entities with equity. Think about that for a second. An algorithm cannot go to jail. An algorithm does not have a moral compass, ethical judgment, the principle of fairness, and ensuring that financial statements reflect true reality. That remains an entirely human responsibility. Software can calculate for sure, but only a human can care about what's actually right.
So we end this explainer by coming full circle. We started by asking if AI will replace the accountant. But as we look ahead, in an automated world, is human ethics actually your greatest asset? The mathematics of Pacioli, they will always balance. And the algorithms of tomorrow, they'll process it all faster than we ever could. But integrity, transparency, and ethical judgment, those are irreplaceable. As we move into the future of business, it turns out that your own humanity might just be the one asset that can never be automated. Thanks so much for joining me on this visual analysis. And as always, keep questioning the future.